Ladies and gentlemen, welcome back to the channel. This week is most likely going to be an exciting week for Rezolve. Now, Rezolve last week had a pretty good week. It hit the low at $2.43, um, and then proceeded to rally from the low. Actually, once you hit that low, you close at the high of the day. You actually closed up 2.76%. Then you were up 12%. Friday, you were down 4.78% in regular trading. At one point, you were actually green, including after hours. You had like a 5% move at one point. The stock hit $293 per share. You could see this on the 1 minute chart, or $2.95 per share. It seems like there was some buying heading into the catalyst on Monday. We're going to talk what that catalyst could be, and specifically this week, why what happens in the broader markets could also affect Rezolve in a big way. I think we're gearing up to see another significant round of upside for the stock that not a lot of people are prepared for, and that's at the core what we're going to discuss in today's episode. Do me a quick favor and hit that like button, as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys have not done so already. But first and foremost, I mean, Rezolve has been volatile lately, okay, to say the very least. Most of what has caused Rezolve to sell off has been broader market related, okay? Not a lot has changed with Rezolve. From that perspective, okay, Rezolve has not reported earnings. We haven't gotten any contract updates. Rezolve bought Crownpeak, which is going to add 70 million to ARR. This makes the prior guidance from Rezolve a little confusing, to say the least. I've broke the numbers down on this channel before, but back in September, Rezolve said they had 90 million in ARR. If you add 70 million to that, you're at 160 million right there. That's already beating full year guidance. Now, that would be assuming there was no growth in the business organically in Q4, like $0 of contracts added. Okay, so the number could come in much higher than 150 million. Could be 200 million, could be more than that. There's uncertainty about how this changes 2025 guidance of 500 million in ARR, okay? There was a little bit of dilution. About 11 million shares were diluted to fund this acquisition of Crownpeak. Overall, analysts have reinstated their prior price targets. They did not change their price targets based on this. The Maxim Group recently said, hey, look, on paper, this means Rezolve should beat their full year, ARR targets, but they didn't want to get ahead of management and predict that for themselves. Now, what's also interesting is the Maxim Group, while they put out this research, okay, and reiterated their $15 price target, they are actually the moderators of this investor event on Monday. It says here, on Monday, December 8th, 2025, CEO Real Dan Wagner and newly appointed Chief Revenue Officer Crispin Lowry, formerly with Microsoft, will join a virtual fireside chat moderated by the Maxim Group. Huh. Interesting, to say the least. Okay, they just reiterated their $15 price target on the stock, said some very bullish things on Rezolve, and on Monday they're going to be moderating the fireside chat with Dan Wagner and the Chief Revenue Officer. This is an investor event, okay? This is the big one on Monday, okay? I am expecting to hear about contracts, growth, guidance, okay? ARR for 2025, and they're going to talk about 2026. Monday, we're going to hear about these things, okay? Now, judging off of the reaction we had on Thursday when this news actually came out, it seems like, people, me like that because he tagged me in it. Seems like others on Wall Street took notice of this. Okay. Now, Dan Wagner will also participate in the Northland Growth Conference on Tuesday, December 16th, where he will hold one-on-one meetings with investors. I don't think that's important at all. It's Monday. Okay. Now, if you watch this channel and you're participating in Rezolve, you know that Dan Wagner said in December we're going to get an update to ARR. So I would be shocked if we don't get ARR guidance on Monday. Okay. Now, depending on what this guidance looks like, this stock is going to react. Okay. The stock has come under a lot of pressure because of largely what's happened in the broader markets. And I think that has been way overdone. Okay. Like the Maxim Group says, the stock should be 600% higher than where it is today based on a 10-year, what'd they say? What's the discounted cash flow analysis? Okay. They basically say Rezolve is trading at half of the valuation of its peers alone. Okay. Based on this metric. Okay. This is a 12-month price target. So, keep that in mind. That's $15 price target in the next 12 months. Now, if Rezolve comes out with let's say 180 million to 200 million for guidance for 2025, anywhere between those numbers, I think Rezolve pretty quickly heads to $4 or $5. Okay. If Rezolve raises guidance for 2026, maybe to 750 million or a billion, who knows, then you're looking at substantial further upside from there. You're looking at, $6, $7, $8 per share, especially if the company says, hey, look, we have no plans in diluting shareholders again. If we get some kind of verbal commitment from Dan Wagner on that as well, it's going to send the stock skyrocketing. Dan Wagner wants the stock as high as possible because they will be selling more stock in the future. Okay, so the higher you can get the stock, the more bang for your buck you get when you actually do dilute shareholders. Keep in mind, management is heavily invested in this company. They own 30% or more of shares, so they want the stock as high as possible as well. Their incentives are aligned with yours. Now, if we get 300 million in ARR, something like that, that would show some pretty crazy organic growth from Rezolve, right? That would show something next level. Okay. And I think Rezolve breaks above $10 per share in the coming weeks in that scenario. That would be that's not my expectation. Okay. Between 180 million and 200 million is kind of my expectation, maybe as high as 220 million. We'll have to see on that. If the company comes in at 150 million, I would be disappointed with that because that would mean they actually had negative growth in their organic business. Okay. If the company comes in at 160 million, I would be disappointed with that because that would mean the company had zero growth organically from September. Now, we can only use September, as Maxim Group points out, because management included acquisition ARR guidance in the 150 million target. Okay, so just barely beating the target means you had no growth. Okay, that's where you get to 180 million to 200 million. That's where the alpha comes in, right? Because 160 million is the minimum in my opinion. You get 180 million, that means you had 20 million of organic growth in the business. You get to 200 million, that means you had 40 million in growth in the business organically. And above that, the higher the better. Okay. So again, it's one of those things where I think there's a 99% chance the management team beats 150 million as their prior guidance was. The question is how high above that. And the reason I say there's a 99% chance, in my opinion, the company beats guidance is because they do not have to do this fireside chat. They do not have to update investors until March, right? That's their next scheduled earnings. They don't have to. So, like, the company, especially in their stage, they wouldn't update investors, in my opinion, unless it was going to be really good, right? Because they ultimately want to sell stock. They want the stock to be as high as possible. Okay. So, mix that with the RSI sitting at 37, oversold, been oversold for a while. The MACD is also above the blue signal line, which is historically very positive for stocks. Like, if there was one single indicator that predicted future upside, it is when the MACD line breaks above the blue signal line, right? That is the moment in which, if I had one indicator to buy or sell based off of, it would be the MACD. Okay, so things are looking better for Rezolve. Seems like we've kind of based out here. Wall Street's had some time to digest what Crownpeak will look like, and overall we've sold off a lot. So to get a little bit of a recovery here wouldn't shock me. Now, as we talked about in the other video put out earlier today, we have some big catalysts coming this week. We have earnings, which number one, Oracle. Oracle had some issues in the in their bond market where their interest rates for 20, 30-year corporate bonds went to like 8 to 10%. So basically Wall Street said there's a problem with Oracle long term where they might come under like some financial pressures, okay? Kind of strange for a company worth almost $1 trillion. Doesn't happen all too often. And a company kind of at the forefront of AI. So that really did not help the AI trade in the last 2 months. Oracle fell like 40%. Are you shocked that Rezolve fell 50 plus percent? Oracle fell 40%? Not really. Okay. If Oracle says, yeah, look guys, we're doing fine, things are great, like nothing to worry about, which is my expectation of what they're gonna roughly say, right? Summarize it there. That's gonna be a huge positive catalyst for the AI story, right? For the AI risk on area of this market. Now, as you guys know, we're also seasonally in a very bullish time of the year. We just came out of a correction or crash or whatever you guys want to call it. It was really a crash under the surface of this market. AI, growth, small caps, right? You had a crash. Let's call it what it is. It was a crash. But for the index, it was more of a correction. Okay. Now, this week we have some important data coming out Tuesday with JOLTS job openings, but the big catalyst is Wednesday with the Fed meeting. You're going to get a summary of economic projections. Now, as I talked about in the last video, for next year, Wall Street is only pricing in 2 rate cuts. You're pricing in a cut, obviously December, right? That's a guarantee. But for 2026, you're only pricing in a cut once in April and then once in September. And that's it. Then you're done. Okay? You're not pricing in a cut October, and you're not pricing in a cut in December. Okay? Now, based on the Fed's dot plot, these probabilities are going to move, but I would think it's most likely that the Fed projects 2 cuts next year, or pretty close to that. So the only way we really get shocked here is if the Fed says like 1 cut or no cuts next year, which is possible, but I don't think the Fed's going to want to deviate from what the markets are pricing in too heavily before December 16th economic data releases, right? We're going to get the jobs report. We're going to get, GDP updates and all kinds of things there, right? I don't think the Fed's going to want to shock markets right before a bunch of data comes out. Not this week, but next week, okay? And we get a new Fed Jerome Powell in May, so how much is it actually, how much is Wall Street going to care about this? We'll see. But if you look at December 9th, the odds of only 1 cut stand at 20.2%. The odds of 2 cuts are at 29.4%, and the odds of 3 cuts at 24.7%. So honestly, even if you get only 1 cut priced in by the Fed, it's not like these probabilities are pretty close to each other. they're within 9% of each other, okay, between one cut and two cuts. Again, two cuts is priced at 29.4%, and only one cut is priced at 20.2%. Like, it's not going to shock anyone on paper if the Fed comes in with one or two cuts. Now, if the Fed comes in with zero cuts, which is highly unlikely next year, that would be a shocker. That is the only way I think we get shocked. The probability of no cuts next year is 0.7%. In fact, we have a greater chance of having 1, 2, 3, 4, 5 rate cuts next year than no cuts. 5 rate cuts next year has a 4.2% chance. 0 cuts next year has a 0.7% chance. In fact, you are 6 times more likely to get 5 rate cuts next year versus 0 cuts from a market pricing perspective. So if the Fed were to come out with 0 cuts priced in for next year, that would be a problem. But that is not going to happen, in my opinion, right? Could it happen? Theoretically, yeah, sure. But there's way too many dovish Fed officials, Fed Bowman, Fed Waller, Fed Williams, Fed Moran, and a new Fed chair coming next year, where they're going to price in at least one cut. They're probably going to price in 2 or 3 cuts apiece, which would offset some of the Fed officials that want 0 cuts next year, right? So you're probably going to be in the range of 1 to 2 cuts next year, probably 1.5 cuts priced in by markets or by the Fed, which is almost exactly where the markets are priced. So I don't see a negative shock coming next week from the Fed, and I think the Fed is going to be a bullish catalyst for next week, mixed with positive Oracle earnings, the strong setup fundamentally we have for next year for the economy, for real estate, for inflation, new Fed chair, AI, all of that. I'm sure you understand the bull case for 2026 at this point. I've talked about it enough. But the tactical rally, like hedge funds and institutions being underpositioned, lagging the S&P's performance, the chase into the end of the year, the historical, bullish period of the month of December, mix all of this together, and I'm quite optimistic about this upcoming week. Mix that as well with Rezolve giving you better than expected 2025 ARR numbers, and maybe raising guidance for next year, discussing the business a little bit more in depth, maybe giving a broader demo or something. Maybe Rezolve Monday confirms that they're going to start reporting on a quarterly basis starting in March. There's a lot that I'm potentially excited about next week, okay? And I think Rezolve could be a massive winner, but it's just my personal opinion. Let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel. Have a great rest of your weekend, and I will see you in the next one.